Hey guys, and welcome to the Working Money channel. Not financial advice.crypto here on Twitter posted this. Okay guys, some of the headlines that just came out moments before the entire crypto market pumped. Let's not forget, they do not want us to get rich. So here was the messaging about a month ago. So on December 23rd, Jim Cramer said I would not touch crypto in a million years. On January the 12th, Bill Gates pours cold water on Web3 and crypto. And then January the 19th, Jamie Dimon mocks crypto. This was just last week, says that it is basically a pet rock. So we've got the headlines here. So courtesy to Not Financial Advice on Twitter, just for posting this. Basically, they want us out of the game. They know it's going to be an influential part of the new financial system, an emerging asset class, a new way for the elites to get super, super rich. And guys, they are trying tooth and nail to get us out. This is the Bitcoin chart on the hourly. As you guys can see, Bitcoin has basically been moving sideways over the last day, right now trading at about $22,800 per coin. We haven't really seen too much volatility over the weekend. We've just kind of been vacillating in this channel here. And actually, that's not a great horizontal line. Let's throw on a trend line here. You guys can see, though, even within the last 24 hours or so, that period of vacillation, we're still seeing an upward trend. So this is all positive news, right? The crypto market generally follows Bitcoin. Take a look at XRP. Pretty much just also trending sideways. XRP right now trading at about 0.407. Other cryptocurrencies that have fared quite well here, guys. HBAR also calming down over the weekend. But take a look at this pattern, guys, on the HBAR chart. We are clearly seeing a very prominent bullish pennant pattern. Hopefully we will see another move to the upside for HBAR. Solana is looking quite similar. This is Solana on the 1 hour, and you guys can see a similar pattern there for Solana. Many cryptocurrencies that really kind of took off last week and now are just kind of calming down over the weekend. So the crypto market's still above $1 trillion, but we got Bitcoin dominance here, still fairly high, 42.2%. XRP in the number 4 spot if you exclude these stable coins like USDC and USDT. We've got Bitcoin, Ethereum, BNB, and then XRP here. Although it is listed as number 6, technically it is the number 4 cryptocurrency. And within the last 7 days, 6.48% to the upside. Over the last 24 hours, we have seen a bit of a downturn, but not by much, guys. Crypto market looking fairly robust, bringing up the total market cap here. And let me throw that on the daily. You guys can see on the daily chart here for the total crypto market cap. I think what a lot of people wanted to see was us getting back up to this level here. And now we're just kind of vacillating in this level of resistance. So to break up above that, I think that is the next step. And so what are people trading? What are the whales trading? XRP Crypto Wolf posted this. XRP has dethroned ADA as the most traded cryptocurrency among whales. XRP flips Cardano for the most traded among whales. So here is what is going on. Crypto Data Tractor Whale Stats reports that XRP has flipped Cardano's ADA for the most traded asset among the top 100 BNB chain whales. Interestingly, XRP and ADA are among the most purchased assets by this whale class. So guys, Justin, XRP has flipped ADA for the most traded token among top 100 BSC whales. Check the top 100 whales here, and it gives you guys a link if you want to check out what the other ones are. And HODL BBW to see data for the top 4,000. So there you have it. XRP made it to the top 10 holdings on the Binance Whales 100 with an average amount of $278,203 held, implying an average quantity of about 708,000 XRP held by this whale category. In total, a whopping 70 million tokens, or 70,821,235 to be exact, rest in the portfolio of these wallets. These whale wallets, which is valued at about $27.82 million. At the close of 2022, a trend of accumulation was observed by sentiment. So I was mentioning this trend of accumulation when we were seeing XRP specifically being accumulated by whales. Sentiment was reporting on that late last year. And so this is what they noticed. It noticed that XRP whales and shark addresses, which comprise the $1 million to $10 million XRP tier, so wallets that held anywhere between 1 million and 10 million were rapidly accumulating, which was accompanied by network growth as address activity did increase. It seems the trend may have well entered 2023. And guys, that is exactly now what we are seeing. Of course, the XRP lawsuit likely having some to do with this, but also, just the energy of the market right now. Looking very hot. XRP, obviously one of those cryptocurrencies that are in the sightlines of the whales because they likely realize that a positive verdict is coming down the pipe very soon. So wanted to thank XRP Crypto Wolf for posting that Also, this guy's from Bubba Cugs. What are the odds? Being a bit facetious here, he posted this article here, or at least a screenshot of this article. This was just released a couple of days ago. A new universal digital payments network was just released, in Switzerland last week, guys. And he retweeted out my video, the one I did last week about these mountain peaks. Look at the similar colors here, relating to the bearable guy Riddle from 2019. An interesting connection there with Ripple 2022. And if you guys didn't catch this video, I will link it up here in the top right-hand corner. It is also linked in Bubba Cugs' tweet. So what is this? A universal digital payments network was launched by the WEF last week. The network aims to provide interoperability between these digital currencies. So it's called the UDPN. And they want to interoperate stablecoins, central bank digital currencies. So it's been developed in the last 2 years with contributions from GFT, Red Day Technology, Toko, and DLA Piper. A sandbox was launched in July of 2022, where multiple banks were actively testing stablecoin transfers and FX transactions. And then the network was launched last week with a panel discussing the rapidly evolving digital currency interoperability and infrastructure. The panel included representatives from Deutsche Bank, HSBC, Standard Chartered, the Bank of East Asia, and AK Bank. The UDPN reports that several Tier 1 banks will participate in a series of proof of concept use cases throughout the rest of this month to demonstrate how UDPN could be used to solve current and future challenges in integrating digital currencies into daily business, banking, and payment scenarios. So the official launch of this, it does sound like it is still in a testing phase. Nevertheless, interesting news here. Coming out of last week's big meeting held by the WEF in Switzerland. Wanted to thank Bubba Cugs for posting that. Also notice this, all right? In another video I did last week, we were looking at the Bank of America and how some poor customers were looking to get their money back. Bank of America said that they were on it, that they were fixing the issue. And if you guys didn't catch the video I did on that, I'll link that one up here in the top right-hand corner. Well, look at what they're coming out and saying now, guys. This is from Ian Binns. Bank of America digital currencies appear inevitable. They're saying digital currencies appear inevitable, adding that central bank digital currencies and stablecoins are a natural evolution to today's monetary and payment system. So going hand in hand to what we're seeing here with this universal digital payment network that I just spoke about, Bank of America's global digital research team published a report on global currencies, digital assets, and central bank digital currencies earlier this week. And the bank wrote, digital currencies appear inevitable. We view distributed ledgers and digital currencies such as CBDCs and stablecoins as a natural evolution of today's monetary and payment systems. Our view is CBDCs that leverage distributed ledger technology have the potential to revolutionize global financial systems and may be the most significant technological advancement in the history of money. The report explains that there are currently 114 central banks exploring CBDCs, representing 58% of countries globally and over 95% of global GDP. It also notes that central bank digital currencies do not change the definition of money, but will likely change how and when value is transferred over the next 15 years. So this is, the move that we are now seeing from even the local banks. Bank of America, in this case, CBDCs issued by central banks appear inevitable for 3 reasons. Firstly, they may increase efficiencies for cross-border and domestic payments and transfers, obviously. And with regards to cross-border payments, leveraging other currencies, other cryptocurrencies like XRP to solve for that liquidity issue is definitely going to play a big part in this. In addition, they may decrease central banks' risk of losing monetary control and increase financial inclusion. So those are some key points that they want to highlight. Down here, the report added central banks and governments can't build new financial systems based on distributed ledger technology alone, and have indicated that they will leverage the private sector to drive digital asset innovation. So Bank of America, a known Ripple partner, has now stated that distributed ledger technology is not going to be implemented by government alone, but they're going to tap into the private sector. Of course, a great example of that is Ripple to drive this digital asset innovation. For example, the report notes that governments may award contracts to payments and consulting companies in exchange for expertise. Bank of America also pointed out some risks. CBDC issuance and adoption could also increase the frequency of bank runs if not properly designed. Wow, did this come out at a convenient time? considering what we were witnessing at the Bank of America this past week. And if you guys did not catch that video, I do suggest, if you're interested in this topic, I do suggest you watch it. During times of stress in the banking system, people could withdraw deposits and exchange them for CBDCs, given that there is no credit or liquidity risk if distributed with the direct and hybrid approaches, increasing financial stability risks. So all very interesting news here coming out of the Bank of America, which is a confirmed Ripple partner. Not only are they a confirmed Ripple partner, but Brad Garlinghouse has also gone on the record and said, once Ripple gets clarity in the United States, Bank of America is one of their biggest partners, one of the bigger ones in the United States that wants to adopt RippleNet. He has actually come out and confirmed that. So that's not rumor, that is fact. Anyway, all very interesting updates here coming out at the same time. I wanted to thank Ian Binns for posting that. Now, we also got this, guys, from Digital Assets Daily. The dominance for the utilization of the US dollar is decreasing, and in this case, we're looking at South America. So, on this channel in the past, we've talked a little bit about Russia, China, and even Iran, and gold-backed stable coins. Well, here, guys, take a look at this. Brazil and Argentina are actually working together to create their own currency for trade. So Brazil and Argentina to start preparations for a common currency. So this is just more of what we have been talking about, but in a different region of the world. Brazil and Argentina will this week announce that they are starting preparatory work on a common currency in a move which could eventually create the world's second largest currency bloc. South America's two biggest economies will discuss the plan at a summit in Buenos Aires this week and will invite other Latin American nations to join. The initial focus will be on how a new currency, which Brazil suggests calling the SUR, could boost regional trade and reduce reliance on the US dollar. So, they spell it out here. Boost regional trade, reduce reliance on the USD. It would be the first run in parallel with the Brazilian real and the Argentinian peso. There will be a decision to start studying the parameters needed for this common currency, which includes everything from fiscal issues to the size of the economy and the role of central banks. So, guys, another example here, more countries realizing that we need to get out of U.S. dominance, stop relying on the U.S. dollar, create our own currency. And, because the technology exists now, it's a lot easier to do that using DLT technology and, creating something that makes sense for these countries. In gold-rich countries, obviously, they're going to look towards a gold-back or create a gold-back currency. And, in other countries, maybe they're going to look at something different. I don't know. We don't have too many details on this. Nevertheless, countries now working in collaboration, especially these countries, right, that do a lot of trade with one another. They are looking to also refute the USD, using that as a mechanism for trade and creating their own currency. This one sounds like it's going to be a combination of Brazilian and Argentinian fiat. So interesting news here. I will link this in the description of the video. It is a fairly lengthy article, but if you guys are interested in this, again, you can check for it in the description of the video. Wanted to thank Digital Assets Daily for posting that. So this is all happening now. As coincidentally, or maybe not so coincidentally, users of Binance are receiving this message, this one from Overnight here at Manifest963 on Twitter. Dear Binancean, we are writing you to let you know that changes may affect your Binance services. Here's what's happening. The banking partner that services your account has advised that they are no longer able to process SWIFT fiat transactions for individuals of less than $100,000 as of February the 1st. 2023, which is only about a week and a half away. So people are getting this now and realizing that they cannot onboard on the biggest cryptocurrency exchange, Binance. Now, guys, this is exactly why I say have a bunch of options available to you. Don't just stick to one cryptocurrency exchange. It's great to have many different options. I know BITRUE is another option that trades a lot of XRP pairings specifically. I do have an affiliate link for that in the description of this video. There are many other exchanges though, and a lot of them are region specific. I know Binance does serve a lot of territories. So this has been a big blow for the crypto industry. But note this, guys, $100,000. Obviously, who's putting in more than $100,000? Well, people who have that kind of money, who want to invest in cryptocurrencies. This is obviously not the average retail trader. Again, trying to keep retail out of trading as per, these headlines here. More to suggest, though, in my opinion, that this asset class is very lucrative. What else do we know about this? So I also saw, same story from Free American Spirit, a little more detail here from AsianMarkets.com. An extraordinary decision involving the global SWIFT payment networks could have widespread implications on the crypto industry. As we know, they're limiting it to $100,000 or more. One of the first crypto giants to notify users of the development this weekend has been the world's largest exchange, Binance. So this is not exclusive to Binance only, guys. Apparently, SWIFT has been going around to many different exchanges and suggesting that other exchanges follow suit. Also notice that Binance wants to retain your business, so this is what they've said, okay? Please be advised that until we are able to find an alternative solution, so they are looking for an alternative, you may not be able to use your bank account to buy or sell crypto with USD via SWIFT for values less than $100,000. So you're going to have to find another way to onboard this money. Binance has confirmed that at this stage, it will only be Signature Bank customers that are affected by this move. So more information here, guys. Only Signature Bank customers. One of our fiat bank partners, Signature Bank, has advised that it will no longer support any of its crypto exchange customers with buying and selling amounts less than $100,000. So again, this sounds almost counterintuitive because, right, for those who are in the know, like you and I, who have been accumulating over the summer, who are not planning on FOMOing in once the market rallies, well, we should have already been accumulating. So this is clearly not going to affect people who have been accumulating right now. Who is this going to affect? Who are they targeting this to affect? People who are looking to accumulate up here when the market rallies and the FOMO kicks in, and retail who don't know what the heck they're doing are looking to make a quick buck. That's who it's looking to really affect. So, a coordinated effort, obviously, to get us out of crypto. More details down here. This one tweeted out by Andrew here at AP Abacus on Twitter. So we know about the $100,000 limit. We know it's kicking in by February the 1st. You can continue to buy crypto on credit or debit card. So that's an interesting observation here. Obviously, your limits will likely be way less. You are able to buy and sell crypto using another fiat currency bank transfer, inclusive of euros. You will be able to continue to use P2P to buy and sell crypto after February 1st if you wish to buy or sell crypto in amounts less than $100,000 USD. With or for fiat using a third-party exchange. You can do so by transferring your crypto to or from Binance. To learn about how to use this integration between Binance and Wallet Trust, you can click here. So I don't have the link here. However, if you guys do use Binance, you should probably be looking into this. So all the money, guys, this is speaking towards something very, very big. Another crypto explosion, likely seeing crypto utility coming very, very close to materializing. We got the Ripple SEC lawsuit in the United States. That's almost tied up. And so we are coming into a new era of crypto adoption. And so, there's all kinds of stories, all kinds of theories coming out, like this collateralization model. I'm not going to go over the model in today's video. But this has to do with the buyback. Bob Way came out, though, and said, I want to write something really profound about this. Unfortunately, it is Saturday evening, and I'm busy with drinking and other important things. So I'm going to leave this here as a placeholder. Feel free to speculate about what I am going to say. So it is currently Sunday morning, and Bob Way is probably not feeling his best right now. He still hasn't responded to this, but I am looking forward to what Bob Way thinks about this buyback theory and about this collateralization model. So I'm going to keep my eyes open for that. David Schwartz even came out on the record saying that he wishes that Ripple gave away more XRP in the early days when it was worthless. So this is another article here posted by Ian Binns, originally on Twitter. So David Schwartz was sharing this over Twitter, his thoughts on XRP supply. Of course, we've recently had the Flare FLR airdrop. So, more discussion has been coming up surrounding this. Discussing the topic, Schwartz expressed regret that Ripple did not distribute more tokens when XRP price was low. In his view, the influx of large numbers of tokens into the market now that XRP price is already at about 40 cents makes things much more difficult. So here's just a little bit of that tweet thread. The two situations are not comparable. The XRP in the escrow belongs to Ripple, a for-profit corporation to do with as fits Ripple's goals. There's no community ownership, no vote. The flare in the airdrop is supposed to be the communities to vote on to benefit the ecosystem. He did also respond with this. As I've said before, I do wish Ripple had given away more XRP. While it was still close to worthless, everything gets much harder to do as the value goes up. And guys, the value is going to keep going up as we see more value added to the XRPL and more value driven to XRP. And I've noticed some reactions to these tweet threads with regards to Binance. Binance specifically saying, we're looking for alternatives. Obviously, there is a better mousetrap. Binance clearly doesn't have to go through SWIFT. And since 2016 or 2017, Ripple representatives have gone on the record and said flat out that Ripple, the company, they are looking to take SWIFT on. They are looking to take a bite out of SWIFT's lunch. So will Binance perhaps resort to leveraging RippleNet in order to make this more seamless for customers. I mean, the XRPL is an open source mechanism, but they'd likely have to partner with an XRPL user. I don't know. I guess they could realistically purchase their own RippleNet license and, facilitate the transfers themselves. The options are endless here. Now it's going to be about how Binance navigates the legal landscape in all the different regions where they operate. But one thing is for sure.
SWIFT is basically almost like a money neutral thing. It was not like we wanted to take over this lucrative business. We just needed things to work better in order for us to like get people to use a cryptocurrency for payment. And so we built this system, RippleNet. And we looked at all the problems there. We brought the failure rate down. We brought the settlement time down. Even it's crazy, but end-to-end messaging prior to a payment is revolutionary, it's ridiculous. Like you go to a bank and you tell them you want to make an international payment. You tell them, how much is this going to cost me? Oh, we don't know. How much money is going to be delivered? Oh, we don't know. Because there's no messaging, right? The money is just sort of pushed down a pipe and eventually something will come out the other side. And a significant fraction of payments that don't fail still the customer calls to check on the payment because they don't know, because they'll tell you it takes 3 to 6 business days. So when do you call them? It's just...
They've been trying to build a better mousetrap since day one and have been succeeding. So I could see Binance. I mean, they've got the money, they've got the resources, purchasing a RippleNet license, perhaps facilitating these transfers by themselves. The fact that Swift is even saying this, to me, I think they're shooting themselves in the foot. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.